What's up, everyone? My name is Ale. Welcome back to my world of stocks, and welcome back to my 3 stocks on sale series, where I use all of the current market volatility to find you guys 3 brand new stocks every single episode that I think are trading on sale at today's prices. And to make things even more fun and interesting, I specifically look for one low risk stock, one medium risk, usually a dividend stock, and then one high risk stock to consider. And that way you get a wider variety of risk versus value versus reward, dividend, and so on. Just a wide variety of different stocks to look at and see what's available in the market. As always, though, I only do this for fun and to give you guys an idea of what's available out there, but you should always do your own research and make your own decisions. I'm not telling you to buy or sell anything. That's not the purpose of this channel. Anyway, if you are enjoying the series and the channel, please consider subscribing and hitting the like button, as those 2 things really help the channel survive, and it really means a lot to me. But thank you for all the support. With that said, we've got a fun video to jump into here, so let's go ahead and jump into today's fresh new list of 3 stocks that I think are on sale. Okay, and as always, we'll be starting first with our low risk option, a very dominant company that is likely to perform well over the long term because of their size and strength. And this time, I'm going to go with a stock that I actually own myself in Visa. Ticker symbol is V, which, if you know anything about Visa, then you know that their stock rarely ever dips, as is clearly evident in this chart here covering the past decade. However, you'll notice that at the tail end there, they have actually started to experience a lot of turbulence around the start of 2020 because of the whole pandemic and really the destruction of the macroeconomy, which is obviously going to impact the largest payment processor in the world. As a result, though, we are currently seeing a very rare dip in the price, as they're still trading around that $200 mark from a couple years ago, which is over a 15% drop from its highs, leaving them now sitting in the bottom half of their 52-week range, which, again, for Visa, this is something that is pretty darn rare. And yet, despite the stock trading lower, their business has actually been on fire in recent years, despite all the macro headwinds. I think it's pretty surprising. See, Visa allows customers to use their payments network for credit and debit transactions, then they collect a fee every time they do that. And currently, Visa controls by far the most market share, with over half of all credit card purchase volume in America, while MasterCard is only at 21%, American Express is at 18%, and then literally everybody else is just in the low single digits. But overall, payments processing, debit cards, credit cards, whatever you look at, Visa has really always been the dominant player. And you would think that already dominant position would leave little room for growth, but there's actually several reasons why that's not the case at all with Visa. First of all, physical currency has been in heavy decline for years, with debit cards already making up 28% of all payments in 2020, credit cards making up 27%, and cash only making up less than 20% according to the Federal Reserve. Much of that is due to changing consumer trends, like, for example, the gigantic rise that we've seen of online shopping, which has gone from less than 10% of all retail in 2014 to basically double that amount today. And it would actually be a lot higher too if we didn't include purchases that usually have to be done in person, like buying cars or gas or things like that, which, by the way, a lot of those things are actually done with cards now too. But it doesn't stop there. Visa has also done a great job of building up their mobile payment solutions. They created a crypto-linked card that already hit billions of dollars in the first quarter, and they're also expanding internationally, where they only generate around half of their sales at the moment, so there's plenty of room around the world for more growth and expansion too. As a result, Visa continues to put up really solid double-digit growth rates year after year, with only 2020 seeing a slight drop in revenue of about 5% at a time when the world economy was essentially shut down for days, weeks, or even months, depending on how you define it. And there was no travel. There was all kinds of these headwinds that would normally heavily affect Visa, and yet they immediately bounced back from that with 10% growth last year. They're expected to do a massive 20% growth this year at a time when the economy is literally in a recession. You would think spending would be way down, they would take a hit, but no, 20% growth expected this year. And then they're still expected to do another 12% growth the year after as well. And it's not just sales. Profits are also soaring with expected EPS growth of close to 20% on average over the next 5 years. That's pretty crazy. They even beat both revenue and profit estimates this latest quarter at a time when so many other companies are missing estimates and announcing layoffs because of the current recession. Now, valuation wise, Visa has never been a cheap stock, but at least at these levels, they carry a pretty reasonable forward PE ratio of 24, which is only slightly higher than the sector at 22 and is significantly lower than their largest competitor in MasterCard at 34. Plus, they also pay a nice little dividend of around 0.7%, which is obviously really small, but it's at least got some fantastic growth metrics on it, all of which, by the way, are better than MasterCard too. Overall, Visa might not be one of the most beaten down stocks in the market with a ton of potential value, like maybe something like Meta, for example, but it is a very solid and dependable performer that rarely ever dips. And so at the moment, I think right now is probably one of those good entry points if I'm thinking long term. Moving on to stock number 2, though, that'll be our medium risk option, which we usually go with a dividend paying stock here since that can help lower the risk a bit since a falling stock price means a rising yield. And this time, I'm going with a stock that I do not yet own myself, but I've been super heavily debating starting a position on it soon, and that is the medical device giant Medtronic, ticker symbol MDT, who develops and sells all kinds of different systems and tools that are used for medical treatments, surgeries, and therapies. It's not a very high growth market, but it does allow them to be sustainably profitable year after year with sales of tens of billions of dollars on the top line too. Unfortunately, the 2020 pandemic did cause many hospitals really around the world to go bankrupt as people were staying home and not getting their usual procedures done, which sent demand for their products and services crashing, and as a result, revenue fell by about 5% that year. Since then though, hospital traffic has picked back up and so has their business, with sales now rising by mid-single digit percentages per year, coupled with super high profit growth of around 13% on average over the next 5 years, which is about double what they saw the previous 5 years. However, the current recession, coupled with rising fear of another pepperoni resurgence that could damage their sales just like it did in 2020, well, that's now caused the stock to crash by about or by well over 30%, right back down to those 2020 lows, as if the world hasn't really made any progress since then. Of course, we know that that's not the actual case though. V-shots have been widely available for over a year now, and the general public, I really feel, just doesn't seem to be as willing to shut everything down again like maybe they once were. This isn't the only reason for the stock crashing though. Medtronic has also done some restructuring of their business, and most importantly, they've been dealing with heavy supply chain issues as a fallout from the pandemic that have affected them so heavily that even their new surgical robot system had to be delayed, which is something that investors were relying on for much needed growth. But here's the thing, all of these issues are only really short-term concerns, at least in my opinion, that I think will eventually pass. And once that robotic system, by the way, gets released, it's going to be entering a gigantic market that is estimated to reach nearly $100 billion just by 2024 alone, according to Allied Markets research. And according to Medtronic's own estimates, only about 3% of the current surgical market even uses robots to perform them at this time. So there's huge room for growth there over the long term. But despite those positives, the stock crash has left Medtronic's valuation around 20% cheaper than the rest of the sector, while their dividend has also climbed to about a 3% yield with some excellent growth metrics on it, like a low payout ratio below 50% and over 4 decades of consecutive growth. In other words, that dividend is not likely to disappear anytime soon. And at these levels, that dividend yield is essentially at the highest level that we've ever seen in the stock. So overall, Medtronic may not be, one of the most exciting, super high growth companies and stocks available out there in the market, but it is, I would say, kind of like Visa, very solid, reliable, long-term performer with a great dividend, and right now seems to be one of the best prices that we've ever seen in the stock. I am very tempted to buy this stock myself. I think that it is going to trade higher over the long term. I already own so many stocks in my portfolio. I feel a little overwhelmed just by the sheer amount of all the stocks I own. So I may hold off a little bit, but if it continues to struggle like this, I mean, I'm very tempted to buy this stock very soon. Anyway, that'll bring us now to the third and final stock of the day, which is also going to be our high risk option. And for these, I like to go with more speculative companies that are definitely high risk, but that also have giant future potential in their markets and that have been beaten down as a stock by a huge amount to where the risk is just simply worth the gamble at this point. And this time, I'm going with a spec stock that I already own myself in Duolingo, ticker symbol DUOL, who is a world leader in language learning apps with typically more than 60% market share, while all other competitors are way behind them at just the single digits. Part of the reason why they've been so successful is because their app teaches you a new language in a fun and more affordable way than traditional college classes that can literally cost hundreds or even thousands of dollars. But Duolingo even offers free versions depending on what you're doing. Plus, they're even expanding into other areas like math and science, but even just the direct to consumer language learning market alone is expected to surpass over $100 billion by 2025, which is like more than 400 times larger than all the sales that Duolingo did in all of last year. So you're talking gigantic growth opportunities here for them over the long term. But really, we're already seeing Duo benefit from this as sales skyrocketed by over 100% in 2020, over 50% in 2021, and they're still expected to rise by over 40% this year. Now, granted, that growth is clearly slowing down as you can see, but you have to keep in mind that this is compared to gigantic growth prior that was fueled by the pandemic with lockdowns and people staying home and glued to their phones. So it's a very difficult comparison. Plus, this year is not only more difficult because the economy opened back up and people are going back outside and probably also taking college classes again, but it's during a literal recession too. So of course subscriptions and advertising sales, all that stuff is going to be taking a hit. So putting up that much growth at all, I think is still very impressive. Meanwhile though, the pessimism has gotten so bad that Duo stock has already crashed by over 55%, losing more than half of their entire value. The biggest concern for me though is the fact that they are not currently profitable. So you're talking about a company that is having to burn through cash just to stay afloat. And meanwhile, although the valuation has come way down from when it was trading at a PS ratio above 30, it still sits at over 10 today, which is a little expensive despite, their very high growth. But the way I see it, that's just what you have to put up with in a spec stock. High risk speculative stocks tend to not be profitable, or they have a rich valuation, or in some cases they have both of those issues, like is the case with Duolingo, which is why the stock has been damaged by so much. But I still see huge potential here, and as a spec stock, if that is something that you might be looking for, then Duolingo might be something worth taking a closer look at, because I don't know, my gut tells me that if the economy and the stock market, or I should say when the economy and the stock market ideally start to recover, I really feel like there's going to be a short squeeze with stocks like Duolingo, and I think they will pop and perform very well, but it's going to be a long-term play. So for me, it's less than 1% of my portfolio. It's a very small, just kind of speculative gamble, but I am holding this one long-term. I think it has a lot of potential and it's very beaten down. I just think it's worth the risk for me. But if I'm not looking for a spec stock, then I would not even touch Duolingo. That's just, if you're in the market for a spec stock, maybe you want to take a closer look at it. But if you're looking for safer stocks, which there are many safe stocks that are beaten down right now that are great pickups, then yeah, stay away from Duolingo. Look probably at something else is probably what you should consider. But again, I'm not telling you what to do. Make your own decisions. I'm just sharing my opinion and thoughts. Anyway, I hope you guys enjoyed the video. What do you think about these stocks that I mentioned? And are there any stocks that you think are on sale? Let me know down below. I may include them in the next episode. Thank you again for all the support and for watching the video. It means the world to me. I hope you're all doing well. And I will catch you in the next one. Take care. Bye-bye.